Anglo American Platinum released its interim results today, in which the miner says the year 2022 has been a difficult time with COVID-19, inflationary pressures and geopolitical constraints stifling activity. The company paid a dividend to shareholders as well during the period. Our business reporter Xolani Mbanjwa caught up with CEO Natascha Viljoen and spoke about mining policy in the country ahead of the ANC policy conference, the impact of higher interest rates, among other things.
Hopefully our shareholders will feel very comfortable, and it's important to note that those shareholders include our community trusts who will be sharing in the dividend payout. Firstly, to start with cost, because that's an important factor of our financial performance. We've seen an increase in cost due to inflationary pressures, but we have been able, with cost-saving initiatives through the business, to offset the lion portion of that increase due to inflation. And then how that played out is in the fact that, aligned with our dividend policy and our disciplined capital allocation framework, the board did approve a 81 rand per share dividend payout, and that equates to 80% of our headline earnings. So our dividend policy supports a guaranteed 40% payout, and then we've declared another 40% special dividend as part of the interim dividend. So hopefully that will be appreciated by our shareholders. I think it's also important to note that it does reflect on our confidence in our business and our market, with the fact that we do have a number of projects in our pipeline that we need to allocate capital to. All of those capital allocation with renewal programs through our business has been considered before we take a decision to do a dividend payout like we have done in the first half.
We heard from one of the biggest miners in the world, BHP, last week, warning other miners in the sector to actually brace themselves for tougher times ahead.
I think it is some good advice from BHP. We definitely see inflationary pressures come through, and our process of working firstly on making sure we've got stable operations, we are focused on eliminating waste and allocating capital appropriately, are all matters that receive quite a bit of attention in our business. As far as commodity prices are concerned, because of other factors in the car manufacturing space, like still hard lockdowns that we've seen recently in China, the chip shortage that has impacted very negatively on car manufacturing. Despite a significant higher demand, we've seen fairly low car production numbers, as low as what we've seen in previous recessionary periods. So we believe from a PGM point of view, despite the fact that the commodity prices are stronger than normal, not to the level that we've seen last year, I don't think those kind of commodity prices were sustainable. If we consider $30,000 per ounce for rhodium, for instance, those are not prices that are sustainable. We're far more sustainable now, and we believe if you consider the context of car manufacturing, it is already quite lower than what you normally would expect, and that we would have seen priced into current commodity prices. We do not take it for granted though, and a relentless focus on continuing to drive all our assets down to the bottom end of the cost curve is part of our response to the challenges that we are facing as a mining industry.
Natascha, you also in the results spoke about having to mitigate COVID-19 in the first half of this year, also geopolitical complexities and load shedding.
Xolani, whilst we've seen a clear reduction in infection rates, there's still a significant overhang of COVID. We see that overhang in the broader wellness of our colleagues working in our operations, where both mental health and continuous long COVID symptoms is a top priority for us to monitor in our colleagues to ensure safe and reliable operations. It's really an important part of looking after our colleagues, firstly. Secondly, I've touched earlier on around how COVID has impacted the supply chain. We still see that supply chain challenges coming through. Some of the equipment that was late on delivery in the first half were all part of a COVID overhang on the supply chain. And there are a number of other examples where we've seen services impacted due to companies going into business rescue. So that is the kind of COVID overhang that we certainly still see in our business.
A couple of months ago, you also commented at an event regarding Rio Tinto Group's explosive report on the safety of female mine workers in the workplace.
Well, it's something that's very close to my heart, and also my management team's heart, is to ensure that there's full psychological and physical safety for every employee that comes to work on a daily basis. As an industry, I think we are waking up to the realities of the societal challenge that we have around gender-based violence, and we're certainly waking up to the role that we need to play as an industry. We can see that in the collaborative work that we're doing through the Minerals Council. We can see that in the awareness that is created and the other supportive work that we're doing in our local communities. Closer to home, we are addressing a number of factors. Not only the physical workplace to adjust that to make it safer and more amenable for women to work in. Also around our systems and processes that will allow for easier reporting, respectful handling of reported cases, to make sure that respect flows through into the victims, how we deal with the victim, how we support that victim, and then all the way into how do we create a culture in our business that is physically and psychologically safe, which is a big portion of the work that we're doing, and then extending into our communities. We've got school programs that look at morality in schools and bringing that awareness already through our school programs, and also through victim centers, where victims of gender-based violence in our communities can go into. We support them for a period of time, and now have also started to look how we help them to become independent and integrate back into society. So it requires a holistic program, but I think it starts with acknowledgement that we do have a real problem.
Your views on the impact and implications of the tightening cycle that we have seen from the Reserve Bank last week, an announcement of 75 basis points. Not only are ordinary South Africans having to deal with that tightening cycle, but businesses as well.
I think what's really important for South Africa Inc. and our responsibility is to make sure that we've got a sustainable business. Our sustainable business makes sure that between own and contracting colleagues, we give jobs to approximately 30,000 South Africans. That obviously flows through in broader economic support. In addition to that, we're one of the largest taxpayers in South Africa, and if we consider salaries and wages, taxes and royalties, local procurement, doorstep procurement, we've contributed close to 70 billion rand to society in South Africa. So when we look at all of these pressures, our main focus should be to ensure that we've got a sustainable business, because that's how we make the biggest potential impact on SA Inc. And the way that we do that is to ensure safe, stable and capable operations. We need to do the basic mining practices really well.
When it comes to the policy certainty and looking at how we expect ANC policy to become the country's policy, what are your views when it comes to the mining charter and how far we are with certainty when it comes to that policy direction?
Firstly, I think over the last number of years, we've seen quite significant progress in giving policy certainty into the mining industry. I think we have worked very well with our regulator and through Minister Mantashe, and we've seen that stabilize after quite, I think, an uncertain period a number of years ago. If we add to that the allowance for self-generation of energy, the independent power producers, the support that we as an industry are starting to get to become independent on electricity, I think these are all boding and going in the right direction in terms of policy certainty and unlocking private sector to do what we do best. So I'm trusting that we'll continue to see more of that. I think for us to unlock the economy in South Africa, that policy certainty is really a requirement for us as a private sector to do our best work. It is also then related to that, really important for us to unlock the economy of South Africa. It will help us to address the unemployment in the country, which obviously leads to a number of other socio-economic challenges that we all know very well. So very much looking forward that we see more of that at enhanced policy certainty and different thinking that we've seen in the last while.